So friends, I'll start this panel with a small question. So what is more important to you, a bright idea or a simple execution? Anyone? Yes, absolutely. So even if you execute a simple idea, it can become a big thing, right? So I'm very happy to moderate this panel because I have people who believe in execution, right? So many people, when people waited and watched for SIF, these people became early adopters. They simply executed it. And now they are India's largest SIF distributors currently. A big round of applause for this wonderful panel, guys. Good. So I'll start this panel directly with Alpesh. Alpesh, you are from Belgavi. It's a small town, right? And you are the only distributor from Belgavi, right? I wanted to understand then when people are waiting and watching for SIF distribution, you become a SIF distributor. So what inspired you to do that?
I thank Nishant for having us here. SIF, I mean, super product for any MFD to sell, I'm telling you. I'm sure everyone has their own reservations on this. What I have understood about this product, let's understand this. Two situations. I'll go more pro MFD level, sales level basically. Say you have an existing client and you go and meet him again, sir, mutual fund, NF or anything. I mean, he has money. We know he has money to invest. But the first reaction, Alpesh, last week, last month, we have given you, I mean, what's new more there? So what would happen? So, I mean, you don't crack that deal. Now the other way, sir, there's something called new SIF. And then he's interested. You talk about derivatives. I'm talking about an existing client, not a new client. SIF is clearly meant for existing client. As of now, let's not go all in for a new client for this. So a new thing of SIF. Tell me what's wrong as an MFD we are doing it. Say if someone has reservations on this, say it may go wrong, 25% derivative. Past 4 months is the best time, I mean, it is tested. My own investment, I mean, people were talking, I was the first one to invest my own in this. I met one of the initiator of SIF and I gave him my check. I'll be the first one in your scheme. And today also it is positive. This past 4 months, I'm telling you the rough phase of the entire markets and it is still positive. So what else do you need for an investor to ensure that yes, we take care of your safety first. So that is how we started. Now take the other way around. Take one more scenario where you are 10 years old in the industry and you have people with 30, 40 years expertise into this. You try talking to a super HNI client, but he says, I have a MFD, I understand mutual fund, I do direct, I do have my own MFD. Now you talk about SIF. You see the difference. That is what we are doing in the place called Belgaum. I mean, a client who was not pro whenever we used to call him. Now, whenever I talk, there's something new, please give us 10 minutes of yours. And we have done that, tested. Clients have started responding well. And we have started doing. Again, I said, it's not for a new client, an existing client. And what wrong are we doing? My question is, if I'm selling a SIP, what wrong am I doing? 25% of the derivative is what scares you all, right? But tell me one thing, name one SIF who's taken more than 3-4% of your short side still. No one. So everyone is testing it. So, and when you have regulators like SEBI, I'm sure 95% of the things will be taken care. Yes, I really understand that past experiences would have not been good in the market. So people are testing it. But yes, as a MFD, if you want to take the first move advantage, please don't miss this. I'm telling you, please don't miss. 5 years down the line, people sitting here, I'm sure everyone understood SIF, so we are here. 5 years down the line, you will really be happy with this. Taking this decision is what my personal belief is all about.
Great. What a way to start. You have given a lot of insights, Alpesh. And a good good tool to get new business from existing client. Great thought. So Salil, coming to you. So what are the opportunities that you have seen in SIF distribution that others don't?
First of all, I would like to say, as the name says, early adopter, your team have also been an early adopter to have a conference on only SIF.
Thank you so much.
What I see when I started my business 20 years back, I had to explain what is mutual fund, how is the trust structure which is there in the mutual fund. And today, whether it's SIP or mutual fund is a common name in every household. Similarly, which I would feel SIF would become a common name in near future in every household. That kind of an opportunity, what I look at it.
Okay.
from a client side, if we want to talk what kind of opportunity, so today they have only long-only products in their portfolio,
Yes.
right? Maybe some few clients would have a Cat 3 long-short products, but majority of them have a long-only product. So this is a product which can bring differentiative, which can bring diversification to the client's portfolio. While I was hearing from a lot of people, from a distributor angle, when we look at it as an opportunity, generally people have tendency of looking at past performance and then only recommending or giving suggestions. But when I know the concept of the fund, basically. Second, I know SEBI have put guardrails on the shorting up option also. So the possible outcomes of that strategy, you would be able to judge. So it's kind of easy for you to tell people what kind of outcomes it can come across. And particularly in India, it's a new vehicle which has started, but globally, it's a common tool. Like you have your hedge funds or a long short funds or an absolute return fund, and a large pie of your portfolio is there in that category. So India, we have just started. I feel it's a long way. Probably one of your starting session guide to 5 lakh crore. Probably it would be in near future, I would say.
Great thought, Salil. What a way to start. Sandeep, so it's not only Indians who are excited in SIF. Sandeep has come from US and established a business called SIF 360. So he has a unique model. So he allows distributors to distribute SIF even without giving an examination. Right, Sandeep?
Oh, yeah, sure.
So can you tell us about this concept?
Of course. So first of all, I would like to thank Cafe Mutual team, for inviting me here and sharing this insight. So and one disclaimer before I start, I have already consumed 2/3 of my energy talking to all of you, mutual fund sahi hai, SIF sabse sahi hai. So now remaining 1/3 I'm going to use now. Uske baad aap mujhe hotel chhod dena. So coming back to your question, Nishant, we have a model which is referral associate, because the idea was to, break this, initial inertia that distributors had, because they were not able to qualify the exam. Unfortunately, NISM, the passing percentage is very low. I have met distributors who had 500 crores, 1,000 crores of AUM, but they have given up literally. So there was a problem clearly existing in the market. They were, fond of this product, long-short strategy, which never existed in India. But they could not do it because of this, So I really wanted to solve this problem. So we started this model, Referral Associate, where people are joining us and, advisory, execution and compliance part is being taken care by SIF 360 and ISM 13 qualified people. And I am also requesting them to, invest their own money in the SIFs so that they can get taste of it. And once the performance is there, they will have track because they have their own investments in the fund. And gradually, I know they will pick up, they will clarify the exam. We are helping them to, appear for NISM 13 trainings too, so that one day they can start doing this amazing product.
Great. Good, Sandeep, that you've told us this amazing model. So Alpesh, coming to you. So you've already mentioned that you are selling SIF to your existing clients. But how do you come to know that your clients are prepared for SIFs?
See, if you see the product well, the entry barrier, natural entry barrier of 10 lakhs, 25% of derivatives into it. After being 5-10 years into this industry, you know your clients well. You know who's doing derivative on a direct side. He's trading in FNO. You know his risk appetite levels. You know how at what level will this client panic. You know so many hundred of things of that client because he's been an existing mutual fund clients to you. So now you know ki SIF has been a good product for him. I mean, it's not universally for all for sure, but we can handpick our clients who will be very good for SIF. Again, to specify, SIF is not meant for higher returns. Very clearly, I don't know. I have my own reservation. It is not meant for higher returns. It is meant for so that it specifically in this market, it's risk reward basically. So if I deliver 13-14% in a SIF and a direct normal mutual funds at 16, I'm still happy, but my client is happy. That is what my client is looking at presently. So that's how I would figure out which client would be more on this SIF side.
So do you do some calculation on spreadsheet as well that these are the client who are qualified for SIF according to you?
Not really. The AUM what we manage of the clients is clear indication, and what returns we have generated helps us to take that call.
Got it. Great. So Salil, so you know that mutual funds are very simple product. Whenever market goes up, NAV goes up, so do our commission, right? And mutual fund so far, so far our distributors have dealt with only long only product, that is buy and hold strategy. Now SIF is a different animal altogether. Here money can be made even when markets are not doing well, right? So this requires a complete change in mindset. So how did you change your mindset up for SIF distribution?
Yeah. For us, it was slightly easy, I would say, because we already were using put options for hedging our portfolio
Okay.
in the case of event risk. So we have already made clients use derivatives to a certain extent for hedging their portfolio. So they were aware about derivative strategy. At the same time, when I look at it, बोलते हैं ना कि कोच बोलते हैं वार्म अप करना जरूरी है खेलने के पहले. तो it was the funds launched 6 months back, but the framework was out almost a year back by the SEBI. So we were all communicating to our clients while the framework was out only. We were all started communicating to our clients that this kind of a product or the vehicle which would be getting launched in India, what was the performance globally, how it would make difference to their own portfolio. So we were making them aware already before the launch of the product itself. So when the product started getting launched, it was easier for us. And in fact, they were looking towards it from a product basket.
But since you have experience of derivative, but what if distributor doesn't have experience of derivative? How can they change their mindset?
Yeah, definitely for an SIF, you should have experience or probably a learning in the derivative aspect, because a lot of strategies what the products are bringing on the table use derivative strategies. So definitely one piece what I would recommend is to learn more on the derivative aspect. And there are a lot of literatures out by the mutual fund houses giving more and more details in intricity about the products, about the strategies. So definitely I would say they should upskill the derivative piece, and probably it would be then for a better understanding of SIF.
And attend events like Cafe Mutual,
Oh, definitely.
SIF. Okay. Sandeep, so SIFs are very complicated product. So there are alien concepts like naked strategy, covered call, sub bouncer ja raha hai.
Right.
If I am not understanding it, how can I make my client understand about it? What's your thought?
Nishant, very valid question. So I would say the mistake most of the distributors are doing is, they start with the complex strategies. They start talking about, in this strategies, you will have naked shorts, and then you will have covered calls. This is all very complex for an investor to understand. We should start with the problem statement. We should start, talking about inconsistent returns, volatility, drawdowns, which are the major problems. And then comes the solution. In SIFs, you can talk about the taxation, like mutual funds, flexibility, like AIFs, and also lesser drawdowns, like he mentioned, risk-adjusted returns, which is very crucial. So an investor does not need to understand the mechanics of the fund, They should know the basics. We should be focusing on the outcome rather than, selling them the product and or explaining them the detail. So that's my take.
Good answer. So Alpesh, so one of the major concern for SIF is risk profiling. So mutual fund risk profiling and SIF risk profiling has to be different, right? Because this is a new product. So how to do risk profiling of client and how to ensure product suitability of SIF?
Nishan, see, if you would have seen people attending this today's event, the MFDs, you would have seen one thing differentiates this MFDs compared to the one which we go for the routine AMC meets. Here, people understand derivative. Moreover, whoever is attended today SIF meeting, they understand derivative. You would have seen there are no common way. Most of the people know derivatives here, but normal schemes or normal launches which happen in a AMC, there you have that different public altogether, which I'm sure whether they know FNO is a different thing. So the same way, understanding a risk profile of a client, first he should know derivative. I mean, if you're talking about SIF, and if people don't understand futures and option, then we are on a different game altogether. So risk profiling would be the first client who understands derivatives, and then we start talking about all these things. Otherwise, he's not your client still for SIF. Then let 3 years, 5 years history talk about it. It's too early to talk about SIF for a client who doesn't understand derivative.
But how do you make your client understand about derivative?
Very difficult at this point making a client understand derivative. It's if we have clients who understand derivative, yes, we make him a SIF client. If he doesn't know derivative, I would surely refrain myself talking about SIF to an existing client.
Okay. And how do you ensure product suitability?
Product suitability is very based upon his EUM, what we have, based upon his risk appetite, as we spoke before. And yes, amount, anything about 10 lakhs, so he's in the mid segment of super HNI and a retail client. So we would always love to talk to people who can match all these three criteria.
Okay, Alpesh. So Salil, how do you develop your knowledge on SIFs? What kind of activities you do?
Just to continue with we were saying on the client segment and other stuff. So how we, just to give you a perspective, how we think about client segmentation. So it's a product for all kinds of category. Whether it's a corporate client coming with 1 year, 1.5 year plus horizon, a conservative hybrid SIF is positioned for him. Individual who is coming up from a long-term horizon, an equity SIF can be positioned for him. You can classify client on the segmentation of whether he is a conservative client or a moderate client or an aggressive client. Depending on the positioning of the client, we basically segment. So that's how we look at it from a segmentation of the client or which client, what kind of product of SIF would suit to them. Okay. Coming to your question, how I keep aware about it, as I said, I was any which ways using derivative for myself and client's portfolio. One from hedging purpose or reducing risk in case of events. There was sometimes we were using derivatives for enhancing returns also, like the covered call which we talk about it. On the existing Nifty indices, we still used covered call option. So I was already equipped with it. Obviously, clients are not aware about derivatives. So what we feel, it is not so very important to client to understand the strategies. What is important is what part of this SIF would fill their portfolio gap. So probably it would be difficult for client to get into the derivatives and other stuff. Obviously, if someone knows it, understands it, it's much easier. But if someone doesn't know it, probably for him, what is important is how this product basket would fill their gap in the portfolio. That's how I would look at it.
Okay. So how do you, how MFDs can increase their knowledge about derivatives?
As we said, clearly, you need to learn more about derivatives. There are derivative courses which are there. That's one. Second, product manufacturers have come across good concept papers on what kind of strategies they would be using it within their products. So that's the second piece I would like. Events like this, as we said, probably you would get to meet people, talk to them, what they talk to their clients. That's how I would look at it.
Okay. So Sandeep, there are many SIF strategies currently. So how can MFDs actually evaluate the quality of these SIF strategies, and how can they shortlist what is best for their clients?
Right. Very valid question, Nishant. Some mutual fund distributors, they tell me when we meet, this is another kind of fund, AMC has launched. But let me tell you, this is not another fund. Friends, this is the evolution of the financial market, which we have not seen. So when I was working globally, I always wonder, like, इस type के funds India में क्यों नहीं है? And when these SIs were introduced by SEBI, so I think this is the future, because in mutual funds, you would have seen like there is a range in which, a particular mutual fund category will give returns. Like if you look at large cap, it can be between 12 and 15, small cap 35 to 40. So very less variance you would see. But in SIFs, it's completely different. Like within the hybrid category, you would find a fund giving -9% in last 6 months, wherever another fund gave +9% within the same category. Can you imagine? So we need to understand the complexity. You need to look at deep dive into the fact sheets and the drawdowns. So how would you choose the right kind of SIF for you? You need to look at the fact sheets deeply and the drawdowns and the consistency the fund managers are delivered, and look at their past experience too, whether they had exposure working with, means it's not necessary that only the bigger AMCs are going to perform. You would find other jockeys too who are going to play the card here this time.
Yeah.
So a fund manager is definitely going to play a big role in managing SIFs. And mutual fund distributors need to, read more about it. You were talking about where they should learn. You can visit SIF 360. We have lots of material for, mutual fund distributor community to learn from them. We are also partnering with few of the AMCs where we will be running these trainings to understand like what covered calls are, what are naked shorts, and a different kind of derivative strategies that they're going to use. That's going to help because you should know like what kind of investor you are, proposing your product to. So hybrid doesn't mean that it's extremely safe. Of course, and hybrid could be aggressive and it could be conservative too. So you should be mindful when you are, advising your client of a particular hybrid strategy.
Do you need to look at different parameters for equity SIF, hybrid SIF, and debt SIF?
Yeah, so if I have to give you, similar means how you can relate these SIFs. So if you look at like in equity, there are three categories. So one is equity long short. You can look at it as a flexi cap fund.
Okay.
And then we have X top 100, which you can relate to mid and small cap, SMED. And then we do have sectoral rotation. So it's kind of thematic fund. And in hybrid, we have couple of categories again. One is, you can think of it as, balance funds, and then multi-asset funds, so which is called, active asset allocation fund.
Okay, got it. So Alpesh, how do you see SIF space evolving in the next 2-3 years, and how will it benefit distributors?
I would agree to what Gajendra Kothari ji spoke about. Very difficult to go all out. I mean, let's not be so aggressive about it. The simple reason for this would be still AMCs have the manufacturer has no major clarity about this. So we are talking about it. I still remember last week calling up for one of the query and they had no answer to it. There was a scheme launched by a SIF where they didn't knew what will be the taxation. I mean, after 2 days they got it listed and they put it in 12 months taxation. So lots of changes are happening at the manufacturer level also. So the right answer for this would be, there's no harm selling a SIF. As I said, do yours first, which I have done, and then put couple of your portions. See, if you're a 300-500 crore MFD, trying a 20-25 crores in SIF should not be a problem. You can't hold on yourself so much that industry goes ahead and then you are and that is what is happening if you would have seen on a MFD level, on a AMC level. The person who are not serious about it, they're still watching, and manufacturers have realized this. So now all are coming with the new schemes you would have seen. I remember manufacturers telling me, no, we are not coming with SIF, like what happened? And they started coming up with the scheme. So too early to take a call. As he said, the standard deviation of the same category of schemes are 3.5, 5.5, 9. I mean, how do you track it? I mean, the same category, same principle, same portfolios, moreover. But the standard deviation is different because everyone is following a different strategy altogether. So this is very too early to decide. Wait and watch, yes, but 5 years down the line, the first move advantage will always be benefited from this because there's nothing wrong. Product-wise, it is excellent. US is doing it from a long time. 30 years of history they have. So there's nothing wrong. The only problem here is even there were some flaws in that US system. So that also would happen, maybe, is the worry all about. So, I mean, even that can happen in a normal mutual fund equity schemes also, what I understand, right? If something wants to go wrong, that there also it could. Just because 25% of your derivative exposure is the only worry point, and I trust my regulators, everyone should do a fair deal on this.
Okay. So if you want to put a number, 10,000 crore to what number in 3 years in terms of AUM?
See, I'll tell you one thing. I don't know where the product goes, but all the way MFDs, the way competition is all about in our industry, crossing a lakh crore would not be a big deal. Issues would be there, clarity would still be on hold, but a lakh crore in SIF should not be a big deal. Big guns have still not started. I'm just talking about big guns have still not launched the schemes. And if they start, the AUM of this 3,000-4,000 crores would look small now. So 1 lakh crore, 2 lakh crores would be a game. But yes, we would season ourselves soon the way we grow into this.
Great insight, Salpesh. Salil, who are ideal client segment for SIFs?
As I said, SIF can be for everyone. Obviously, the minimum ticket is 10 lakh. So above that, it can be for anyone, whether you talk about your corporate client who's looking out for an arbitrage plus category kind of a thing, client with a 1.5 year horizon, an individual who is looking to give differentiative product or get differentiative product, diversification, create alpha, or probably keep the portfolio resilient enough. So it can be for an individual, it can be for a corporate client, it can be for a conservative investor, it can be for an aggressive investor. So each basket, so as Radhika ma'am was saying, in a hybrid category, you had 5 different funds positioning into different categories. So depending on the client's requirement, the portfolio gap, what the clients has, you can pick and choose accordingly. So probably it's for everyone. Minimum ticket is, that's what you have to adhere to it. That's it.
Does your client ask for SIFs currently?
So we had only taken to the client. So basically, people were aware about it much before actually the products were getting launched. So yeah, and today it's a part of our portfolio recommendation from day one. So if a new client actually comes across on my table, some portion, maybe 10-15% of the portfolio is getting invested into SIF. That's how I am
Part
looking.
of your process.
Absolutely.
Okay. And what kind of questions they ask about SIFs?
Obviously, people have heard about mutual fund, right? SIF, second, SIF as a new concept, and second, the brand name which SIFs are coming across are also new, right? So they are coming from the same house, but with a different name. So people are also worrying about that piece also. But we make sure, these are coming from the same house. Fund managers at majority of the places, the research team or the processes, everything is almost the same, done at the group level only. So yes, people question because it's a new brand which is coming across. But once we try to explain them, they are okay with it.
Okay. Salil, what kind of investors should not be recommended SIFs at all?
Yeah, good question. So as we said, what kind of investors can be invested? So people who would like to see products linked with the benchmark in a shorter term time period. I would say 1 month, 3 months, 6 months. How is my fund performing with the benchmark? I would suggest not to get into it, because majority of the products what we are talking about, it's all absolute return product. And once you see the full cycle of it, it's that time where you would be able to compare with a benchmark. So any individual or any corporate who is looking out for short-term benchmarking of returns, probably at this moment I would not suggest to them. It's a more of an absolute return product. That's how I look at it.
And what kind of time horizon should be given to SIFs, equity, hybrid, and debt?
It's similar like the mutual fund piece. If you are talking about equity piece, we are talking about 3 years, 5 years, 7 years, 10 years kind of a time horizon. Whether it's hybrid, depends on which segment of hybrids you are taking, anywhere between 1 year to 3 years kind of a time horizon what you should look at it. So broadly the time horizons remains the same. As he said, we are looking at actually SIF what should bring the standard deviation much lower, the volatility much lower than the mutual fund piece. Probably what we are talking about in the earlier session also, the upside ratio should be higher than the downside ratio basically. So that's how we are looking at from the SIF piece.
Great. So, Sandeep, one concern of MFDs who are yet to start selling SIF is that they fear if something goes wrong with the product, they may lose trust of their existing clients. So, how to deal with this issue?
Yeah, Nishant, that's a very valid concern, since it's an evolving category and there could be, differentiated outcomes like we have seen in the last 6 months. So I think the SIF should not be pitched as a replacement of your existing investments. You should see them as a complementary offering to your existing investments, maybe 10-15% of the total portfolio. And let me tell you, for maybe another 6 months or 1 year, these are going to be the push products. After that, your clients will come themselves कि मेरे को और SIF में move करना है. Because when they will start seeing alpha in the strategies with more risk adjusted returns, this is the job that you have to do is for just 6 to 12 months. After that, SIFs will play their own role.
Okay. So one preparation that I need today to become a good SIF distributor, अगर आप बोलना चाहे तो, अगर आज कोई सोच रहा है, if anyone is thinking going back and doing SIF distribution, so what kind of preparation they need to do?
First is knowledge, I would say. You need to read about it and the kind of strategies which are there. Of course, regulator has also asked to do the risk profiling. It's not that you can use the existing mutual fund profiling because there is a variety in the SIFs. So you need to be self-aware first before recommending SIFs to any of your investors. Of course, as I said, we are running some initiatives to make you aware of how differentiated SIFs are versus, because you already understand mutual funds, PMS, AIFs. You need to compare it with the SIFs. Then it will become easier for MFD community to understand like what kind of SIFs are more suitable for my clients. So there are a few initiatives that we are going to take and that we will share. And first be self-aware and then start recommending to the customers.
Okay. So Alpesh, what are some misconceptions related to SIFs based on your experience?
The important misconception would be higher returns. I mean, SIF is a product for higher returns, which I still have my own reservations on this. Present market scenario, best product to maybe a hedge tool for anyone, a complementary product, as it said. But still, people are selling. Even if you Google a SIF, I'm still telling you, you all can try it. Put the word SIF in Google, and you'll see for higher returns. The first answer is higher returns, which is a very wrong misconception. I'm telling you right now on this. This tool is the way markets are moving. The last 4 months, the war scenario, this would keep happening now. I mean, if I mean, talking to so many fund managers around, CIOs around, they are very clear. Gone those days, market will be one-sided. The only flaw of SIF, I should tell you all, if market goes one-sided up, your returns are compromised. Correct? You all agree to this because you have couple of amount on that 25% hedge side of it. So you all should agree. I don't know. My personal thing, markets would surely not go one-sided up going down the line with taking so many geopolitical thing and 100 of things still coming. So down the line, 13-14%, hedging yourself 25%, this is how things would move down the line. And as a MFD, if you want to grow, make SIF your USB. With the markets you play, please start talking SIF. I know it's not easy. You start doing it. I have done that. In a place like Belgaum, if the word SIF is there, people know Alpesh is talking about it. Whether on all our platforms, we keep talking SIF, it's a boring, people don't understand it still, but 1 year, 2 years down the line, the way mutual funds sahi hai, everyone knows it now. That way you will see SIF also one point of time. And that time people will remember you, yes, Alpesh was the first person to talk about SIF.
Okay. Salil, okay, you want to add something to it?
I would clearly say there is some misconception what we were talking about, whether it's the distributor fraternity or the client. SIF actually increases risk. That's a misconception what generally people have. It is not an instrument only to increase risk. It is actually the reverse way around. The fund managers have got lot of immunity within their basket to actually reduce the risk on the portfolio, to give you a better risk adjusted return on the portfolio. So a big mindset, because derivative is linked to high risk, but in this space, probably derivatives are actually spaced for reducing the risk on the portfolio. So that's a big misconception what I have, and I would like clients as well as the distributors to move out from that misconception.
But what is the risk that is associated with SIF, which everyone should know?
Obviously, you are giving more freedom to a fund manager than a mutual fund manager. So, lot of flexibility in the hands of the manager. Whereas in the mutual fund, you are probably limiting him to only think from the long side. So, one slightly increase in the risk when I look at it is clearly the fund manager risk gets slightly elevated because of giving more flexibility to it. Besides that, SEBI have made sure there are guardrails for everything in the unhedged short position also. So I do not see any other bigger risk, I would say.
Alpesh, you want to add?
To add this, so the 25% of the AUM goes to say derivative for the short side is a big amount. So that's the worry. So if all of fund manager as per the regulator goes all out for 25%, it's a big number. So that's the worry. And it's legal. I mean, regulator is allowed you. Though it's just 2, 3, 4% is what has been used now. So that's the worry down the line. Any fund manager can go more aggressive and use the entire 25% short side, then it can be a worry for anyone.
What's your take, Sandeep?
So I would like to clarify here, like this 25% naked short, it's not a mandate. So if fund manager is of the view that the markets are in the raging bull market, everything is positive, earnings and global data, so he could take that liberty of going 100% long too. Doesn't mean that ये सिर्फ गिरती हुई market में आपको better return देगा. They can equally deliver returns even when the markets are going up.
But what practice was followed in US when they are allowed to do
Okay, so those were more leveraged, but in India, thankfully, there are so many guardrails as he mentioned. So in US, they had strategies. There were hedge funds too, which were conservative in nature, but there were aggressive funds too. Like they could go 50% long and 50% short in different stocks, and returns were so variant that a similar kind of fund could be delivering 30% return plus, and one is delivering negative returns. So here, thankfully, we have, and since it's a new evolving strategy here, new product, so 25%, and most of the fund managers have not used it yet. We have gone through the fact sheets. But one thing, Nishan, the volatility is going to stay there. And for SIFs, volatility is the best friend. You cannot imagine markets going in one direction only. They will be like this forever. So yes, we have stable government, our growth rate is good. But how far? Means if the government changes in next 5 years, God forbid, 10 years, and how markets would react to it. So we should be prepared for that. That's why I think SIFs can be a great asset to your client's portfolio.
Okay, volatility is somewhere good for this product. Yeah, great. So before we wind up, we have very little time left. I would like to ask one question each. Okay, so I'll start with Alpesh. Alpesh, one SIF strategy that every MFDs must explore.
The hybrid side of it, the way 80% of the EUM is with the hybrid strategy. So a FD investor at 6-7% can try a hybrid out at 8-9%, very minimal risk. The way SBI has launches long short or hybrid, we've been selling that aggressively. So 4 months with so much volatility, still they are delivering close to 3.54% in this market. If everything goes smooth, 8 to 10% should not be a problem with the equity taxation. So that's where we are placing our product. So that's a USB what we are cashing on.
Great. Salil?
No, I would also say the conservative hybrid piece is where you can get it to all kinds of investor basically, because that piece after the debt taxation which has got changed, that's a lacuna which is there from a post-tax return perspective. So that's the category which I look. Interesting one category which I was listening when Radhika ma'am was saying about it. Okay, the small and the mid-cap category can also be, or maybe Sandeep ji was saying about it, the small and the mid-cap category can also be a replacement to the PMS category. So that's an eye opener for me also. Okay, how you look at it, SIF, small and mid cap, to cater to the PMS client who is looking out for a small cap PMS kind of a thing. So that's one more thing.
Flexibility, I guess.
Yes.
Yeah. So one thing, Salil, that MFDs must do before recommending SIFs.
One thing what MFD must
Must
do.
do, yeah, before recommending.
Yeah, as Gajendra says, skin in the game has to be there. Personally, I have first of all invested into it, and then asking my clients to get invested clearly. Second thing, should have knowledge about derivative. So any client ask you about what kind of strategy or what is inbuilt into it, because if you read the fact sheet also, if you do not have the derivative knowledge, you will not be able to read the fact sheet also properly, because there are a lot of things what they have done it in different formats. So derivative, what I would say, should at least the distributor should get learning into it.
Perfect. Sandeep, one skill set needed to become an efficient SIF distributor.
I would say you have to be knowledgeable too. And of course, you should know derivatives, like how they perform. And differentiation within the SIF category, that's the key to it, And don't put all of your clients' money, if they're a new investor, starting off, mutual funds are better options. Don't advise them to put their money in SIFs. Means I would say an ideal client for SIF would be who has, maybe portfolio of more than 50 lakhs. They have patience, and also they are not looking for guaranteed returns. SIFs can also give you negative returns too. Let me be very honest. So yes, they have the potential for sure of generating alpha over the, the comparable mutual fund category, or say PMS or AIF. And greater flexibility has been given to the fund manager. And the best thing about it is you should talk to your investors, especially PMS and AIF investors, is about taxation. Just read about taxation, that even if the AIF is generating 7% alpha, in that case also SIFs will be the winner if you look at in the net in-hand returns. So that's very crucial, because investor, as an advisor, you should know like what is in hand. So 7% alpha is huge. So I'll give you one example. Like if an AIF has delivered 22% return and SIF has delivered 15%, still you get more in hand in SIF. So that's very important. You should know the taxation and the features of the SIF so that you can do the risk profiling accordingly. And the last thing I would like to say here is, mutual fund sahi hai or SIF sabse sahi hai.
Right. So with that, we have come to an end to this interesting panel discussion. So to summarize, having skin in the game is important. Derivative knowledge is important. Volatility is the best friend of SIF. And SIF, just like mutual fund, SIF bhi bahut zaruri hai. So a big round of applause for this wonderful panel. And finally, I thank each one of you for being such a wonderful audience.